Good morning, everybody. It's Wednesday, September 4th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down a half cent at 408 and 3/4. November soybeans down 7 at 1005. December Chicago wheat up 2 3/4 at 569 1/4 last trade. December Kansas City wheat up 3 1/4 at 579 1/2. December spring wheat up 3 3/4 at 611. Mackenzie, we hit 16,000 subscribers on YouTube yesterday.
That's pretty darned exciting.
YouTube and their statistics program tell me that like only 30% of you guys who watch are actually subscribed to the channel. I never ask you to do this anymore, but if you guys are not subscribed on YouTube, make sure you hit subscribe, turn on the notifications. You'll be alerted whenever we upload something, which is, I know, the same time every day. But it's nice to get an alert, and we appreciate you guys, so thank you. Let's start off with Brazil and this drought story.
So, drought in Brazil is becoming a larger concern for traders. Well-followed private group StoneX kept its estimate for the country's soybean crop unchanged at 165 million metric tons this week, but mentioned that farmers will face challenges with regard to planting as a result of dry weather. Early soybean planting typically begins in September. This morning's forecast offers no rain for the vast majority of Brazilian soybean country during the next 10 days. The extended GFS model indicates that rains may begin in the country's southern states at mid-month. The November 24 soybean contract gained 12 cents per bushel on Tuesday.
It's pretty early. It's pretty early to get overly worked up about dryness in Brazil because you're still kind of should be a transition period away from kind of the dry season and into the wetter season. That being said, you've got a massive fund short in the row crop markets, soybean market, corn market, and maybe this is enough to spur some short covering. I think this is part of the reason that we've seen a rally in the row crops the last few days and yesterday in particular. I think this is part of the reason. I also think some of it is just plain old short covering and technical domino effect type stuff. When the charts start to look a little bit better, it induces short covering and additional buying. I still think also as it relates to the rally that we've seen here, the little pop in prices, whatever you want to call it, I think that last week's first notice day has a lot to do with it. Farmers in the U.S. that held September basis contracts were essentially forced to price those basis contracts. Some of them were rolled forward, but a lot of times that puts a bottom in the market. Unfortunately, that's how it works. Also, we've seen a few analysts or scouts or whoever reduce their expectations for the U.S. corn and soybean crops. Dr. Michael Cordonnier, who is well followed, brought his estimates down by a half bushel in soybeans and by a full bushel in corn this week as a result of recent heat. So I think you've got a number of factors responsible for the rally here. Brazil is one of them. All right, let's get to this China-Canada story.
China plans to launch an anti-dumping investigation into Canadian canola imports. The probe comes after Canada announced a 100% tariff on Chinese EVs and a 25% tariff on imported steel and aluminum from China. Over half of the canola produced in Canada is exported to China. Last year, more than 90% of China's total canola imports came from Canada. Beijing claims that Canada is dumping canola supplies, causing losses for domestic Chinese producers. According to the Chinese Commerce Ministry, Canadian canola exports to China increased 170% between 2022 and 2023. North American canola futures dropped their daily limit of $45 on Tuesday, the biggest one-day loss since August 2022.
I know a lot of you guys, there are a few of you guys watching in Canada in particular that ask us to cover canola, and we can only do so many things. But canola got smacked yesterday. Still not even back to where it bottomed in mid-August. You could be there by today, I suppose. So that's interesting, and it did have some impact on the soybean market. This resulted in lower soybean oil prices yesterday, but then you saw some spread unwinding, so the meal actually went higher. It was kind of a back and forth deal. The most interesting part to me about this is that we in the United States are in the process of doing the exact same thing. Back in May, Biden essentially signed a deal that would hike tariffs on Chinese EVs, solar cells, steel, aluminum, and that sort of thing. And they're supposed to be implemented this year. And as a matter of fact, Voice of America had this out, and Voice of America is like a U.S. government funded news outlet. But they said this: and this was printed earlier this week, the United States is currently scheduled to implement a 100% tariff on China-made EVs, a 50% tariff on semiconductors and solar cells, and a 25% tariff on lithium-ion batteries and strategic goods such as steel, aluminum, and ship-to-shore cranes in the coming days. And this was printed just earlier this week. So what if the U.S. goes the same route, hikes the EV tariffs to 100% this week or next week, and China comes out with something similar as it relates to corn, soybeans, pork, beef? I mean, who knows what it could be? But this trade war stuff, as you saw in the canola market yesterday, can get very dicey and result in lots of market volatility. So there's a lot going on here potentially. We hope that doesn't happen. As much as we like to hate on China, we really need them to buy soybeans. And if they don't, we've got a big problem. So something to be aware of, certainly.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some recent premium videos?
Last week, I did an explainer regarding recent cash recommendations as it relates to corn and soybeans. So if you're a row crop farmer in the Midwest or anywhere in the United States and you're growing corn, soybeans, you're looking for advice and recommendations on when and how to market grain. That's what I discussed last week. And then yesterday, we did some more what I call hardcore grain marketing information. Capture and carry with put options. There's only two ways to capture carry. Do you know what they are? You should. And I discussed one of the ways, which is to sell or hedge versus a higher price deferred contract, and how this can work for you, the pros and cons. Not a recommendation by any means, but kind of went through the process. If you guys want to see the premium stuff, there's a new video every single business day. Our morning email, which is kind of your normal grain market newsletter, goes out every single business day at 5 a.m. Central Time. The difference between us and everybody else is that we've got tons of premium content in video form that covers grain marketing, grain markets, weather, policy, all sorts of interesting stuff that applies to you guys. Go to standardgrain.com, sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. I'll give that deal a shot today, guys, and I will forward you a copy of this morning's email, which includes our 6 most recent premium videos.
Despite record-breaking heat, U.S. corn conditions were unchanged last week. The crop was rated 65% good to excellent nationally as of Sunday, steady with the prior week. The rating exceeded the trade expectation of 64% and was the best for the week since 2018. USDA estimates that 19% of the crop is mature nationally versus 11% last week and 13% on average. U.S. soybean conditions were reported at 65% good to excellent nationally as of Sunday versus 67% the previous week. The rating fell below the trade expectation of 66%, but was the best for the week since 2020. USDA estimates that 13% of the crop is dropping leaves versus 6% last week and 10% on average.
So the ratings in corn and soybeans still lead the trade to believe that trendline yields or better are likely, if not probable. Look at the state of Ohio. Ohio corn dropped 7% in the good to excellent category last week, from 49 down to 42. And I know that there is a drought in the south to southeast part of the state, and I think it's been spreading. So that's the one that really sticks out to me here as something that maybe drags your national average down just a little bit. Now, it is normal to see ratings decline as you move closer to harvest, and a flat corn rating and a slightly lower soybean rating week over week is not totally surprising. What about wheat?
The U.S. spring wheat harvest is progressing. The crop was 70% harvested through Sunday versus 51% the prior week and 70% on average. Analysts had projected harvest to be 69% complete. U.S. winter wheat planting began last week. The crop is 2% planted nationally versus 2% on average.
Yep, winter wheat planting will be getting going here pretty soon. Start slowly. We'll have some graphics about that here during the next couple of weeks.
Abundant weekend rainfall in Argentina is expected to benefit corn planting. According to the Rosario Grains Exchange, some areas of the country's main farmland received upwards of 2 inches of rain. The moisture comes as farmers are slated to plant fewer corn acres this season due to concerns about a leafhopper outbreak. The exchange anticipates that corn acres will be cut by nearly a fifth compared to the previous season. There are reports, however, that recent rainfall has increased the probability that farmers will plant more acres than expected. According to the exchange, corn production this season is estimated to reach 49 million metric tons.
So acreage is still going to be down sharply the way that it looks.
Yes.
But the rains could help to maybe grab some of those acres back. So we'll see what happens. I think USDA still got a pretty big Argentina corn number penciled in.
U.S. corn shipments were strong last week. USDA reported that 38 million bushels of corn were inspected for export during the week ending August 29th. The print was up 5.2% from the previous week and up 100% compared to the same week last year. Soybean shipments were at the upper end of expectations at 18 million bushels. The print was up 18% compared to the prior week and up 22% versus the same week last year. Wheat shipments were reported at 21 million bushels. The print was up 5.2% from the previous week and up 82% versus the same week last year.
These are good numbers, but this is old crop data, and very soon we'll be moving to new crop shipping data. The crop that we ship very first post-harvest out of the U.S. is soybeans. You're going to start to see soybean shipments escalate here in the next, call it 6 weeks, and then that persists through about December, January, and then you'll start to see corn shipments a little bit heavier after that. So we did everything we needed to do, I believe, during the old crop marketing year for corn and soybeans to hit USDA projections. They might have to fiddle with the numbers a little bit, but shouldn't be any big changes versus what they've got in there currently.
We had a flash sale of soybeans on Tuesday. U.S. exporters sold 5 million bushels of beans to China for delivery during the 24-25 marketing year. The sale comes on the heels of an identical flash sale to China on Friday.
Yeah, so China's been in for some more soybeans, and we've seen the weekly sales reports look a lot better the last couple of weeks. New crop soybean sales last week were strong. I think China was in for 800 or 900,000. So they're doing what they typically do, just to a lesser extent, and they're still behind where they would typically be. Some of this trade war stuff bothers me a little bit, but very much of this is contingent on Brazilian weather, the Brazilian crop. And we mentioned earlier, yeah, they've got a drought certainly, and a dry forecast, but that could change and typically does change around this time of year.
U.S. oil prices plunged on Tuesday. WTI crude declined 4.4% to $70.34 per barrel, its lowest close since December. The decline was partially due to news that Libya's feuding governments may reach a deal that would allow more than 500,000 barrels of oil per day to return to the global market. Oil prices also declined as manufacturing activity in China fell to a 6-month low in August. Additionally, manufacturing activity here in the U.S. was slower than expected last month. Oil prices have been under pressure since OPEC Plus intends to go through with its plan to increase oil output by more than 1.4 million barrels per day starting in October.
Oil doesn't look good. Fresh lows for the calendar year, essentially. Not a great look here at all. Let's check in on the Bloomberg Commodity Index, which is basically just leaked lower for a long time. I mean, it's been almost a full year of this just kind of choppy sideways action. There are some environments in which I believe crude oil and the movement there impacts the grain markets. I don't think this is one of them. I think we're in an environment right now where commodities as a whole, the basket is kind of sideways-ish to lower. And I kind of think each market's just kind of doing its own thing. There was a period in 2021 and 2022 where commodities were rallying in tandem. And then you saw a period later in 2022 where they kind of sold off altogether. And now we're in kind of a do your own thing type environment. So I don't know that the weakness in crude has to mean a whole lot for the grain markets. What did cattle do yesterday?
They were mostly higher. Live cattle were 67 cents lower to $1.12 higher. Feeders were up 20 cents to $1.57 higher. Box beef was also higher yesterday. Choice ended the day at $310.67. That was up $1.33, and select ended the day at $300.11. That was up $4.29.
U.S. dollars a little bit lower. Stocks are lower again, and they got beat up pretty bad yesterday. The S&P's down 22. The Dow's down 80. Bonds are flat. Crude oil is up 36 cents in the October WTI at 70.70. Have a great day, guys. We'll talk to you on Thursday.